This is the Mo Money Podcast with your host, Jessica Moorhouse.
Hello and welcome to episode 46 of the Mo Money Podcast. I'm your host, Jessica Moorhouse. Thank you so much for joining me. For this episode, I'm very excited to talk to my next guest, Todd Tresidder from the Financial Mentor, financialmentor.com. He also has a podcast of the same name. So very excited to talk to him about his journey and what he does as a money coach. He didn't always start out as a money coach. He actually was a hedge funder and was able to retire, air quotes, at 35. He was financially independent, was able to leave his day job and do whatever he wanted at the age of 35. And of course, as a serial entrepreneur like he was, he started his own business and his own website. So I'm going to talk to him today about what retirement at such a young age meant to him, why he got the idea to become a money coach and start his own side business, and what kind of tips he would give to any of us, me, about starting your own business and just how to rethink financial freedom in retirement. So we're going to talk about a lot of interesting things in this episode right now. Thank you, Todd, for joining me on the show today.
Thanks, Jessica. Thanks for having me.
It's a pleasure. I found out about you when I went to FinCon in 2014. So I'm super excited that you're on the show with me today and I can kind of pick your brain.
Happy to be here. Do your listeners know what FinCon is? Financial Bloggers Conference?
Oh, I mentioned it a couple times. It's the nerdiest. I reference it as it's the nerdiest conference you've never heard of.
But what's amazing is you put all these financial nerds, they're basically introvert writers, financial geeks. And they are one fun crowd. No,
that's true. That's true.
You would never think that, right? You'd think, oh boy, that's a fun place to go. And actually it is. It's one of the best conferences, total fun. It's like total fun crowd.
And it's huge. I had no idea. I know it hasn't always been this big, but when I went to the 2014 one in New Orleans, there was so many people. It was incredible how many people were, in that industry or had a personal finance blog. It's crazy.
Yeah, I've been going since the beginning. I went to the very first FinCon. There was just a couple hundred of us.
Wow. Yeah. It's grown exponentially. It's insane.
Yeah, well, it's credit to Phil Taylor. Phil Taylor, I mean, it's his culture that he created. It's almost his family. And he sends a lot of love out to it and it comes back.
Absolutely. Yeah. So let's kind of jump in, Todd. I want to know, you have a crazy story that you are a serial entrepreneur and you were able to, retire, air quotes, by 35. So let's jump in and, let's kind of go from the beginning. How did you get interested in personal finance and investing and entrepreneurship? And how did that lead you to where you were, financially able to retire at 35?
Well, I had always been an entrepreneur. I don't know if people are born that way or what, but it just, I've always been figuring out how to solve problems and create things and do stuff. And I was just always innovative and got into it. So I've been an entrepreneur. I mean, I started with paper outs as a kid and I had one and then I used the money to buy a motorcycle so I could deliver more papers faster and ride a cool motorcycle every morning, even though I didn't have a driver's license, and then, branched out from there and had a sailboat refinishing business and I had a pool supply business when I was in college and I've just always done it, and then when I came out of college, I had this crazy vision that I could make money investing in assets and not know anything about them. I could do it all statistically and mathematically. And I was told
Are you a big numbers person?
I'm kind of a weird mix because I'm a bit of an engineer type mind, a numbers geek. And yet I'm also real intuitive, because of my coaching side. I've done a lot of coaching with people for years. So there's a real intuitive personal side to me, but yet it's all anchored or foundation of a bedrock of numbers, quant, and science. The way I teach this is wealth building is science. It's all the way your wealth compounds is by math and science. It's, there's a discipline to it, and yet ultimately getting wealthy is all about you.
Yeah.
Your wealth plan is about you. So even if you look, I have a process up on my site called 7 Steps to 7 Figures, and I didn't make it up. I mean, I quote unquote discovered it or observed it in all my coaching clients. Yeah. And it's the natural 7-step progression everybody goes through in the path of building wealth. And I just noticed it in the clients and just started categorizing it. And lo and behold, I had 7 steps to 7 figures. And what you'll see in there, there's a little pyramid diagram on the main landing page, the main sales page that talks about all 7 steps. And you'll notice that they're grouped in pairs. You've got a personal one and you've got a financial one for each level of the pyramid, right? So like the foundation has a personal foundation to wealth as well as a financial foundation to wealth. And it's the coupling of both that creates success. You have to put the personal with the financial.
I totally agree with that. Yeah. So you were a hedge fund manager for how long in your career were you a hedge fund manager? It's a hard thing to say really fast. Sorry, hedge fund manager. There we go.
So I believe 12 years. Don't hold me to it, but I think it was 12 years.
Can you tell me exactly what that is?
Hedge fund?
Yeah. What did you do as a hedge fund manager?
It's skill-based investing, right? So like traditional investing is almost all, you see almost everywhere on the internet and is commonly taught. It's basically the quote-unquote truth of the day. The truth of the day varies with market cycles. We've had prolonged bull markets in both bonds and stocks, and so the truth of the day has become low-cost passive index buy and hold. You can go back in time, like you can look at the truth of the day as evidenced by Gerald Loeb's Your Battle for Investment Survival back in 1935. It was a bestseller on the back end of the Great Depression. And it's basically the truth of the day was the direct opposite of what the truth of today is.
Interesting.
So the truth of the day varies with time. But right now the truth of the day is that it's low-cost passive index buy and hold. And that's what everybody teaches. That's what's practiced with I don't have firm numbers, but probably 90% of the money out there or more. And so that's how everybody does it. And what I did was I did an active approach. And the approach, hedge fund investing actually has a variety of different disciplines. The discipline I fell into is what would be called quant investing. So everything's done statistically and mathematically. Now there's other forms of hedge fund investing like global macro, and these are called styles. These weren't mine. Mine is purely quant. So I would develop statistical and mathematical algorithms for the markets and do everything by the numbers. Okay.
And so I guess you were really good at that because you were able to kind of retire when you wanted at 35.
Yeah, we had, out of the 12 years, again, I believe it was 12, we had 100% profitable years, however many years I was doing it.
Oh, wow.
And that's through a lot. That's through inflations, deflations, presidential assassination attempts. Chernobyl blew up and wiped out the commodity markets downwind of it. And I mean, a lot went down in that time frame. And so we went through a lot of market conditions and we had 100% winning years. The investors actually had a really, in full disclosure here, I had one system blow up one year. I did a thing called, again, I'm using fancy terms here, but it's the way you describe this stuff. I had a method called long short mark. No, this one's one you can say fast.
Yeah.
Long short equity market neutral, which means I'm simultaneously long and short equal amounts of stock, so I'm neutral on the market. So I've neutralized market risk by being long and short equal amounts. Anyway, so you make money on the spread and the performance as opposed to having an outright market direction bet. So anyway, I had a portfolio on that, and it was before the days where you could do real extensive computer research. You got to understand, I was doing this stuff back in the day when, Apple IIs were still being made in the garage by Wozniak and Jobs. So, I was one of the early pioneers in the industry, and, some of this research, I couldn't get databases. Like in order to do this research, I had to hand code in monthly data out of old Wall Street journals.
Wow.
In order to even come up with a decent stock database in order to test stuff. And it turned out the data was a problem. I didn't have sufficient data sample size in order to really prove out the method. And I had one of my systems blow up on me. And it was totally my fault. It was faulty research, right? And it had enough of a loss that the other systems all that year were kind of mediocre. They were positive, but they were mediocre, not great years for anything. And then I had one really bad system that blew up. And so the combination, the portfolio only slightly made money that year. But the expenses were high enough that the investors experienced, it was a tiny fraction of 1% loss.
Right.
And that was my worst year ever.
That's not bad if that was just 1 year out of 12.
Yeah.
So what made you decide? So you decided to retire, but I mean, as an entrepreneur, I get that you don't really retire. You just kind of choose to do what you want to do and give up the desk job. So first, did you always?
That's a fun conversation. Yeah. What is retirement, right?
Yeah. Well, what was your idea of retirement at that point?
Yeah, well, I mean, retirement is just a euphemism for old age financial independence, right? And I mean, that says a lot right there, right? Because I mean, you can have financial independence at any age. You don't have to. You don't have to turn old to do it.
Absolutely. Yeah.
But then you go into this question, the flip side question. It's one thing to retire at 65 or 70 when you're old and you're tired and you just want to play golf and read novels. It's another thing to retire at 35 and have hedge fund investing be the last great thing you ever did with your life or your creativity, which is kind of lame. So, you know, yeah, I had financial independence, but it doesn't mean that I'm not going to create anything with my life.
Yeah.
You know, and that was part of the journey, was just trying to understand what creates a fulfilling life. It's an interesting process when you go through financial independence. A lot of people don't understand it. And it's a thing where, you know, you spend your life where you're trading time for money, right? Most people have jobs and they have work that they do and they're kind of trading their time for money. And when you have financial independence, you don't have to trade your time for money. Instead, you're trading your time for whatever fulfills you.
Yeah.
And it isn't necessarily what I call the pro leisure circuit, right? It isn't just endless entertainment for you. That's not fulfilling over the long term. No. The way I teach it is that vacation is wonderful, and I vacation, you know, 3 months plus a year, but it's only meaningful in the context of a fulfilling life. And that's usually work that's creative and adds value to the world and is your contribution and creates connection with others like we have here and so on and so forth. So there's a lot more to a fulfilling, happy life than just, you know, laying on a hammock on a tropical beach with an umbrella drink.
Exactly. That sounds fun for about a week, and then I'd probably go a bit stir crazy.
Yeah.
So what was your plan when you kind of, quit your job at the hedge fund manager? You were financially independent. What did you have the idea like, okay, I'm going to start my own website and blog and a coaching business? Or did that come later?
No, I totally blew it. Because, and this is a principle I teach. See, everything I teach from experience, right? My life is kind of the crash test dummy for everything I teach. And so I blew it, right? Because I didn't really have a plan of what I was going toward. No, I just had a plan of what I was going away from, which is having to answer to making money. And so when I came out, I fumbled. I had a couple business adventures that failed. I did some travel. My wife and I put on backpacks and traveled around Europe and Middle East for about 6 months, which was really cool.
Yeah.
I came back and blew out a business, lost a bunch of money, and then we said, well, now let's go to Thailand and Asia. And so we did that and came back again and made some more mistakes. And it was a tough period of disillusionment because I didn't, it took me a long time to really sort out, what am I here to do? What is my unique contribution? What is satisfying for me? That kind of stuff I hadn't really sorted out before I quote unquote retired. I had to fumble through it post-retirement. And, that causes a lot of mistakes. Like I made another classic mistake, which is I thought my investment was my job, investing. And when you make investing your job, you put a lot of pressure on your assets and you start forcing activity because you feel like you should be doing something. And a lot of times the smartest thing and most profitable thing you can do is nothing at all when it comes to investing. And so you don't want that to be your job. So anyway, I just went through a lot of mistakes and it cost me a lot of money. It was really a bad period.
Well, I think that's interesting for people to hear because I think, like you said, when people think of, oh, wow, you're able to retire early, that must have been a dream. You can travel and do everything. It sounds amazing. I totally understand the whole disillusionment. Like, when it comes to sometimes I'm in these moments where, I have a day job and I also have my, side job with my website and this podcast and everything like that. When the idea comes of what is my purpose? What am I doing? What am I going towards? What am I running towards? I don't know. Because sometimes I just don't even have the time to think about it. So if I did have all the time in the world to think about it, I'd probably make mistakes and have a long period of what am I doing here,
Yeah, so the way I teach it is that, and you basically just said it, which is when your life is structured in a workaday world, it's pretty clear cut. And so you don't really, you have to lead a responsible life, but you're not really responsible for leading your life because the major decisions are already made. You're going to have a career, you're going to report to your job X weeks out of the year, you're going to take a few weeks of vacation. The basic structure of your life is pretty well laid out. When you have financial freedom, all that gets cleared out and there is no basic structure and you're suddenly self-responsible for every aspect of your life, including your happiness. Like when you're having to report to a job and you got a boss and your boss sucks and work suck and, you know, you'd be happier if only this, and if only you could get to here, or you could get to this raise, or you could get to this new position, you'd be happy. Like you have all these excuses for why you're not happy. And when you're financially independent, suddenly all those excuses are stripped away and you're self-responsible for your happiness. You're self-responsible for what you do with your time, how you create your life. You're self-responsible for everything. And, you know, that sounds really cool, and it is. Like, right, it's a gift. It's wonderful, right? But it's also a tremendous burden if you're not prepared for it.
So what are some things that now you're doing great. What did you learn in that first year that you were able to kind of overcome those obstacles and be in a better place?
Well, I fumbled for far longer than a year.
Oh, yeah?
No. I'm not nearly that quick, right? So, no, I fumbled around for a while, went through a lot of personal growth. You know, that's part of why I've got kind of this weird dichotomy, you know, combination of personal growth and strong engineering mindset, strong quantitative mindset. So, no, I went through a period of disillusionment, you know, to really kind of sort my way through it and just kind of fumbling around. You know, I started Financial Mentor, financialmentor.com. I started that, 97, 98. That's how I ended up with that URL.
No way.
Yeah, it was way early on. I'd seen, you probably don't even know the name, right? Nobody knows this guy's name anymore. And yet he was almost like the pioneer of internet marketing. His name's Corey Rudel. Have you ever heard the name Corey Rudel?
No.
He taught most of the gurus who you would have learned from.
Really?
Yeah, he was one of the early pioneers. The reason you don't know about him, he ran a company called Internet Marketing Center, and this guy was brilliant. Like he is so brilliant. He would talk 90 miles an hour, and his voice still couldn't keep up with his mind.
Wow.
Right? Like, I mean, this guy was just a nuthead. But really smart, really cool guy. And I happened to have lucked into seeing one of his first speaking appearances ever. And he was already making over $1 million a year on the internet when most people didn't even know what the internet was.
No way.
And he was one of the first guys to realize that it was the ideal direct marketing medium.
Yeah.
And so I had sold the hedge fund, and I just happened to end up in this conference. And I'm watching this guy, and I went, wow. I mean, my jaw just dropped. I totally got it. I got what was there. I saw the opportunity. And, you know, my wife had kind of been getting on me about, what are you going to do with all your knowledge, Todd? Everybody asks you questions about stuff, and you just kind of blow them off because people don't really even have the basis for asking the right questions. Back then, you got to understand the stock market was hot, and everybody wanted hot stock tips, right? This is going back to late 1990s in the great bull market.
Yeah.
And so I'd do bluff answers and void it. I got this URL, and I just said, you know, I'm just going to start building this thing. And if it turns out to get ugly, and, you know, because my ideas are kind of unconventional, you know, and doesn't follow mainstream finance at all. And I was like, if it gets ugly and people start attacking me on the internet or whatever, I just give myself permission to drop it. That's how I got the courage to do it in the first place. And I never did. I mean, people were very supportive. They're very appreciative. They're like, wow, finally somebody's saying it the way it matches my intuition. I always thought it was this way, but I never had the words or knowledge for it, you know? And so I've been building it ever since. But so that's how I lucked into it. Was 1997. I saw Corey Rudel speak. And the only reason you don't know his name, by the way, to finish the story, is he was into fast Porsches. He used to race Porsches, and he was the passenger in a Porsche that hit a wall at about 200 miles an hour.
Oh, that's awful.
Yeah. I mean, he died young, ran fast, brilliant guy.
Yeah. Wow. Well, that's a pretty crazy story, though, about your... I didn't realize how old your website was. That's insane. Good for you.
Well, what I did was, good for me. Why isn't it bigger? Why isn't it more famous, right?
What are you talking about? Come on.
Well, you know, the funny thing was, again, this is just being candid, right? I just made lots of mistakes. So what I did is I made all the mistakes everybody does with a website, because back then WordPress didn't exist.
Oh, yeah.
So there was no simple CMS. So like every page.
Did you just code everything yourself? Or?
Yeah, everything had to be hand coded. And, you know, the common refrain for entrepreneurs is, oh, you can't be an expert at everything. And so you have to hire it out, right? And so what happened was I ended up in this stuck place where any page I would put up, I knew that I was hiring somebody else to code the page. And I would get into this endless cycle of perfectionism because I knew I couldn't go back and touch it.
Yeah.
And so it was just this nightmare. You'd have to know FTP to go in and change a spelling error. It was just terrible. Yeah. And so it was a cumbersome process. And so I just put up a brochureware site, which fortunately was enough to keep the coaching practice full. So because I've always ranked, right at the top for financial coaching, money coaching. That's awesome. That traffic was enough to keep my coaching practice full. And it just kind of sat there and languished. It was just this sort of cute little boutique business that I had on the side that I did this coaching and experiment around. And I was working stuff out. I started figuring out 7 steps to 7 figures. I was really trying to figure out, could I help ordinary people really achieve extraordinary financial results, And it took me a few years. I'd say, it was 3-5 years of making mistakes and doing a few things right and helping people out. And I started getting into a system. I really started producing consistent results. And then about then is when I discovered WordPress. And then that's when it really took off, because what it did, WordPress is, it's a simple CMS, a content management system. But what it really did was it matched who I was. See, because if I'm a perfectionist, what it did is allowed me to just make it good enough, because I can easily go back and change it. It was everything was within my reach, and I could touch it and manage it. And so it solved all my perfectionism issues, and I could just start building. So that was where Financial Mentors. So really, Financial Mentors, you see it today, really kind of, I would say kind of 2007, 2008 is when I started taking it seriously. And so from 1998 to 2007, 2008, it just sat as brochureware, and I really worked on my real estate portfolio instead.
That's awesome. That's really inspiring, because one of the things that I hope to achieve I don't have a timeline necessarily, but one of the things that I definitely want to do is, besides have a blog and a podcast, is absolutely have some kind of service where I'm a money coach to, millennials and just be able to help people. I want to help people. So it's really inspiring that you were able to do it, and hopefully I'll be able to do it. And your website's amazing. It has so many really, really useful resources, which I love.
Thanks.
You're welcome.
Yeah, it takes a little effort.
Just a little bit. Oh man. Yeah. I can
see,
imagine.
This goes back to what's fulfilling. See, for me, that's my art.
Yeah,
right?
Exactly. It's fulfilling.
I had a guy tell me this a long time ago, because I was like all frustrated, and I said, I kind of viewed myself as an artist. And he looked at me one time, and he knew me pretty well. He's a really smart guy. And he says, Todd, business is your art form. I never got that until he said that to me. And it was like he just set me free. Yeah. And then I should pull the quote for you. Hold on. I got a great quote for you. Let me just grab it off my computer.
Please.
Hold on. So this one sticks on my computer, which I've got the mic away from it so we don't reverb. So this is by Andy Warhol, who, if you know Andy Warhol,
I do.
He took a lot of abuse for commercializing art.
Yep.
Right?
Yep.
And so he has this quote, which I love. It says, "Being good in business is the most fascinating kind of art. Making money is art, and working is art, and good business is the best art."
Oh, I like that. I might have to put that on a Post-it and put it on my computer.
Yeah, I just loved that, for an acclaimed artist to put it that way. And it just kind of matched where I was at. And so where I'm tying that back into is Financial Mentor is my expression. That's where I'm expressing my art. Again, I hope I'm not just rambling on here.
No, I totally get where you're coming from. Yeah, you have a space that's yours that you get to say what you want and help people. It's that is exactly what art is, right?
Yeah, and so the funny story on this, the backstory on this, where this came from was I had my old junk site. I call it my old junk site, right? So years ago, I had just been cobbling it together over the years and just learning how to do all this stuff, but it was a mess, and it was all put together. And I was at my niece's wedding, and all these family members I hadn't seen from all around were there, and they're all coming up to me and telling me how much they like my site and how they had been following me, and I cringed. I felt I didn't feel proud. And I was like, even though they were complimenting me, and it was such a wake-up call. I went, so what's up with this, Todd? Why are you cringing finding out that your family members have been following you for years? And that was the turning point for me. I said, I'm going to fix this thing. I'm going to make it so I feel good about it.
What I'm curious about, since you have had your website for so long and your coaching business, what do you have what's your kind of, 1 year or 5 year plan for it? Do you have a certain goal you want to reach, or you're just kind of seeing where it goes?
Oh gosh, no, it's all in goals. It's been through cycles. You can actually see the cycles on the site.
Yeah.
Like the first cycle was just getting up the core content, right? And so you'll see that in a lot of the categories. The second cycle was I got really into the calculators, and that took a long time. I mean,
that's hard.
There's 80 calculators on there, So there's different calculators for basically all these different financial things that you got to do in life, and they make the number crunching easy, right? Because they're little turnkey calculators that solve all these problems for you. So that took me 80 of anything. When you look at that, that's a long time.
Yeah.
So between getting the articles up there and getting the calculators and getting things set up, so that was a long project. That was a year plus, maybe 2 years, I don't remember. And then I went off on the books.
Yeah.
So then there's 5 books. So then that took a while. And then I went through the content audit to get all the stuff cleaned up, which I was talking about that came after my niece's wedding. Got it all built up. That was like a year and a half, 2 years with 2 different site revisions and on, massive content cleanup. And just trying to pull all the loose pieces together that I created over the years and make it a cohesive body of work. And now I'm into building the courses out, which is the 7 steps to 7 figures. And that's what I'll be doing for the next 2 to 3 years. So what you see is these constant cycles of evolution, each step building on all the previous steps. And then once I build out all the courses, the next evolution after that, now I have the monetization platform, and the courses are there to serve people. So now I turn out and I really roll out the content marketing and really build out the categories of content and expand the whole site. And then that's when I'll also make it, each of the categories so you have category specific experiences by then, right? So if you're in one category, the whole site will have a different experience. And if you're in a different category, you'll see all different offers and different things. So I have years and years of stuff planned ahead on the site of the evolution of it.
That's awesome. I'm excited to see where it goes.
Thanks.
You're welcome. So just kind of wrapping up, I think you're so inspiring how you're not a website developer. You didn't really have any expertise when it came to websites when you started your own. And now you have a huge website with it's a money-making business. And that's really cool to me, just because, as a millennial, I find a big thing with a lot of people that I know is entrepreneurship. That's something that was never something that I even knew existed or was a possibility when I was growing up, even in university. It was very much like, you go to school, you get a job, you do that job, and you kind of just, do what your parents did. But, that doesn't work anymore. I've had a second job since I finished university, and I don't know if I'll ever not. So as a serial entrepreneur who has a money-making business, what kind of tips would you give for someone who is at the beginning of their career and they just want to figure out what are some good ways that they can do the best instead of just doing the 9 to 5, what kind of things that they could do on the side?
Yeah, so there's a couple quotes that come to mind as you're asking that. I'm a quote freak. I love quotes.
I love quotes.
Capture a lot of knowledge in a small space. One of them is, everybody overestimates what they can accomplish in 1 year, and they greatly underestimate what they can accomplish in 10 years of focused, planned effort. And so if you notice, there's a theme that runs through almost everything that I've done in my life, which is I have focused, planned effort. Like, I didn't learn the hedge fund business overnight. I spent a decade researching. It's almost like that 10,000 hour rule popularized by Malcolm Gladwell. I mean, I spent a decade at the computer testing systems and figuring out what works and what doesn't in the markets. I paid the price. I learned my chops. And then once I kind of figured it out, I was done with it. It no longer stimulated my curiosity, right? So that's another one, is just be curious. Follow your curiosity. So then once I saw Corey Rudel speak, then I was really driven by this whole idea of what the internet could do. It allowed me a platform for connecting with people in a way that was efficient. I could give through content marketing rather than sell, right? You can just give value. And I really got how it worked, and I was excited by it. And so I started doing it. And again, that's just a thing. It was this long journey of learning. I wasn't a marketer. I didn't know how to write. So I had to learn writing. I had to learn internet marketing. I had to learn sales funnels, how all these pieces fit together. There's a lot to it. you know? And so it's been a great adventure. And so that would be another piece I'd throw in. There's embrace the adventure. Another piece I'd throw in, particularly for millennials, is focus on your earning capacity.
Yeah.
You know, try to increase your earning capacity because your wealth is a function of how much you earn minus how much you spend. And so how much you spend is, you know, you can control it, but you can only go so low before you experience deprivation.
Yeah.
And so there's limits to how far frugality can take you, but there's no limit to how far income production can take you.
Which, is something I've definitely learned as I've gotten older. Just like you said, there's a deprivation situation that can happen when you're like, I can't cut back anymore. So you have to figure out another way to like, how do I earn more?
Yeah, it's not fun.
It's not. I'd much rather make money.
Well, that's one of the things I teach is sometimes it's easier to figure out how to make more than to spend less. You can spend as much time and effort trying to figure out how to save as you can just to make more and pocket it.
Absolutely.
So anyway, as a millennial, you want to focus on your income earning capacity early on and really magnify it because that will compound over your lifetime. So anyway, those are just a couple different ideas to throw in there. The other one I would throw in for millennials, one of the few regrets I have is I wish I'd purchased more real estate when I was younger. You know, because if you get it on fully amortizing fixed rate mortgages, one of the great opportunities right now is with interest rates at all-time historic lows.
Yeah.
The cost of borrowing has never been lower, and it's almost certainly going to pay you to borrow at some point. Like if you have a 30-year mortgage, at some point in that 30 years, inflation has to greatly exceed whatever fixed rate mortgage you could lock down now. And so essentially they should be paying you to borrow money over the course of the loan realistically. And so I think that's one of the great opportunities is to get income producing real estate on fully amortizing fixed rate mortgages. But you got to be careful and notice my exact wording as I said that so that you don't make mistakes. Income producing real estate, i.e. positive cash flow.
Yeah.
Okay, so there's a valuation component implied in that statement. And it's financed with fully amortizing, not balloons, not any sort of funky financing, right? Just traditional, fully amortizing, fixed rate mortgages. And that, to me, is one of the great opportunities that millennials face.
Though I do feel, because you're from the States and I'm from Canada, I don't know if you're aware, but like I live in Toronto. I'm originally from Vancouver, and it's in my mind, I'm like, not the right time to buy at the moment.
Yeah,
though interest rates are super low. It depends on the market for sure.
Yeah, it depends on the sub-market you're in. But that's why I was very specific about positive cash flow.
Absolutely. Yeah, you got to make sure it is a good investment, you know?
Yeah, premium markets like you're talking about 2 major cities.
Yeah.
Premium markets will not be positive cash flow.
No, for sure. Well, thank you so much for joining me. One of the things I think I'm going to take away and just think about for a while, especially since you started your website in the 90s and you've taken it to where you are. Sometimes I get caught up in the, looking at other people that are, at the next level of me and like, oh, how do I get to that point? Sometimes it takes time and you have to keep going. And I've realized that, especially like I've had my blog for 4 years and it's definitely grown over that period, but I'm excited to kind of see where I can take things the next 4, 10, 15 years. So I think there's definitely some value in what you said about time and, having a plan, having some very structured goals and just, doing it really.
Yeah. I mean, most of the growth in my site's only been in the last 4 or 5. If you look at the first 10 years, it was just brochureware. And then I had several years of fumbling around and doing everything wrong. And so it's okay. You can make mistakes and you can, start something and set it aside for a while. Just have a plan and have focused effort and just do it. And the main thing is just embrace the adventure. Just go live it because you're going to get old like me and then you're going to die someday, So you gotta go for it because life's short. And it sounds so stupid to say that to millennials because they think they got forever. You don't have forever.
No.
I mean, it's a cliche, but it's totally true. It will go by fast, really fast, particularly if you're really living the adventure. It will go by very fast.
Absolutely. Well, thank you, Todd, for joining me on the show. I appreciate it.
All right. Thanks for having me on the show, Jessica.
And that was episode 46 of the Mo Money podcast. Thank you so much to Todd for chatting with me. Make sure to check out his awesome blog, financialmentor.com, and also his podcast of the same name. I will make sure to include links to both in the show notes, which you can check out at jessicamoorhouse.com/46. And I had such a great time chatting with Todd, but I want to know what you think. So make sure to send me an iTunes review. Let me know what you think. You can also tweet me a